Okay, let's take a quick look at the NASDAQ Futures. Everybody's worried that the world's coming to an end. But if you look at the market structure based upon the monthly period, we haven't violated the 50-month moving average. In the past 15 years, the NASDAQ Futures has not violated the 50-month moving average. And the 50-month has been over the 200-month, and it looks beautiful. Now, that doesn't mean that the market won't continue to go down, but right now, even considering the damage from 22,000 down to about 17,000, we're still actually on track. We've had it before. In 2022, we went from 16,000 down to 11,000, and that didn't feel very good either. But what's happening now is pretty similar. It could be that we'll get support and we'll continue to go higher. I'm not predicting that, but what I'm saying is that everybody says that we've been in a crash for the past month, and of course it feels like a crash when you're losing money and you're not positioned. Anybody who's short is celebrating. They're not thinking that their net worth is crashing. But most people are long. So when the market goes down, they freak out. When it goes up, if the market goes up from 11,000 to so it doubled basically in 2 years, 2.5 years. People weren't freaking out about the volatility in the NASDAQ futures and go, "Oh my God, I'm making so much money." It's only when they lose money that they talk about volatility. So, from a technical perspective, this really isn't bad, and it actually makes the market better. If we were to get support here and start, consolidating and then gradually moving higher, this would actually be very good for the market, because once in a while you got to just flush out the weak hands. You got to flush out the speculators and retrench. I'm not predicting that. I'm just saying that that could happen. So let's look at it on a shorter term time frame. These bands, this is the 50 period, plus or minus one quarter of a standard deviation, and this is the 200 period, plus or minus 1/4 standard deviation. You'll find that on any time frame, these bands are very relevant on any product that is actually market driven. Even some products that actually don't seem to be that market driven, they still, it's surprising how relevant they are. But the more the product that you're trading, be it the S&P or be it some individual stock, is the more players there are, the more activity, the more the price seems to be driven by market forces rather than manipulation, the more these bands are going to be relevant. Okay, so let's look at the weekly period, and you can see going back here all the way. Yeah, obviously when you look back and you go, wow, gosh, I wish I'd gotten in here, because what has it done? Yeah, this is back in 2011. Remember, people were freaking out, thinking the world was coming to an end in 2011. It was a massive buying opportunity, obviously, because you got 10 to 1 return just by sitting there. Even if you had to ride this volatility right here, you're still looking at 10 to 1, and that's the power of being in the market. In an environment where the market is trending higher. Obviously, if you'd gotten in the market here, that wouldn't have been good. If you got in here in February 2020, and then you rode it all the way here to, so basically 3 years, because it would be like almost January 2023, you would have gone from 9,600 to 11,000, and you'd be like, wow, okay. That sucked. So yeah, if you pay attention to what's actually happening in the market and you make just strategic buys and sells based upon where it is relative to these bands, I mean, overbought can continue to be overbought. Like, when do you get off the train? That's that's always it's always difficult, because there's individual stocks that might go up and then come back down, right? And you're like, oh gee, I get screwed. That is for another video where I talk about actual strategies for portfolio sizing. If you're going to put everything everything on red at the at the roulette wheel, then just be prepared. So there is a way to think about portfolio sizing and picking the products that you're going to trade. And don't think about it as trading. It's actually investing, but you're making corrections along the way. Okay, because if you buy in, say right here at December 2018, when that was actually the last week of December, that was an awesome buying opportunity, and it seemed like the world was falling out of bed, and then you rode it for about a year, actually, about a year, a year and 3 months. You would have made decent money right there, like 56 to 96. Okay, about 80% on your money for just holding it for a little over a year. You could have traded individually, right here, if you want to trade, a little more actively. And there is an argument for trading more frequently, but what you'll find is, if you try to trade more frequently and get every twist and turn in the market, you're going to end up psyching yourself out. You'll get out of a trade when you shouldn't. You'll get back into a trade when you shouldn't. And it just screws up your whole mentality. So we're going to talk about that later. I'm just telling you where we are currently using the NASDAQ Futures as the product. Because, of course, the NASDAQ Futures and the S&P Futures and the Russell Futures are the three main products that basically tell you where the market is going. So let's look at what happened here. You can see all this time for the past 15 years, it has at the very least respected the 200-week band. Couple times when it fell out of bed, that was awesome buying opportunity. When it went below, certainly when it's above the 50-week period, 50-week band, this is when you want to be long, right here. And then when it starts showing weakness and comes back here, then you want to consider either shorting, but you got to be very careful. On a market that's just trending up, you don't want to fall in love with the short side. But what I would do actually is you just flatten out and you go watch, binge watch Netflix for a few months and relax and not even think about the market, except maybe like once or twice a week. Figure out where we are. In this case, it went down and touched the 200-week band. If it, you'll find that it will touch the band and reverse. And in cases like this right here, where it goes through the band and hits the moving average, that's a very strong buying opportunity. This right here freaks people out when it goes below the band, but or the moving average, but it didn't go below the lower band. And that is the difference between somebody who is what do you call it, wisdom and ignorance. Most people who are trying to invest for themselves, and even a lot of the active professional traders, are absolute morons when it comes to the market. They wing it. The real successful people long term, they sit back and they strategize. What are the odds in this case that the NASDAQ futures would have gone below this band and just like start, what are they going to do? Start giving out shares of NVIDIA for free? No. At some point, there's going to be people saying that it's had enough selling. People who are holding, they're not going to sell. People who are sitting on the sidelines with cash, they're like, okay, it's time to start putting that cash to work. And that's sort of what we've been going on. What's happening here is, we had this this rundown here for quite a while. Anybody who bought in here at 17,000 and then rode it all the way down here to 11,000, they're like, oh God, what was I doing, right? But if you were kicking back and looking at the market structure and you're like, yeah, I'll just now you had some trading opportunities right here if you're shorter term, but if you're a strategic player, you just go and do something else until the market has worked itself out. When it starts showing signs of life, you can see how it taps, but each time it taps, it's higher, and now it comes above the 50. The 50 band came down. Actually, the 50 band came down and touched the 200 moving average, and the price starts going higher. That's what you want to look for when the market turns. And it's an interesting phenomenon when you're an amateur trader or beginning trader. Everybody's an amateur when they start out, right? It seems that that you believe that every time you buy a stock, it's like the right opportunity for it to turn, right? The market, the stock's going down right here. In this case, it's a basket of stocks, right? But it trades like one stock, and it's going down. Let's say you're like, okay, yeah, I'm gonna buy right here, right? You think that's the perfect time to buy, like it's got to go up because you bought, and it keeps going down, and then you start freaking out, right? But if you recognize that you're probably not going to buy at the right time, don't go all in. That goes to what we're going to talk about later with portfolio sizing and the mental inner game. If you really don't need that money to pay the rent, why are you freaking out? If your game plan is 10 years, why are you freaking out if the stock goes down over a couple of weeks, or even in this case a year and a half, right? Well, let's see what it went from. About a year, a little bit more. So okay, so what's happening here? We're on the weekly, and it peaked out at 22,000 something. Starts like everybody who's buying in here, right? Mom and pop, they're like, oh yeah, it's gonna keep going. Oh my God, look at this. It's gonna go to the moon. And then it didn't, because you have a market dislocation. Trump's, tariff strategy starts freaking out the people who are holding options and stocks. And it's really, a lot of times what drives the market is actually the option market. It used to be, a long time ago, options were secondary to the price move of the stock. But now you'll find that the price move of the stock is secondary to the options. And it's options that actually set the price. So you had people loaded up on option strategies. Suddenly, Trump throws in a wrench, and they start thinking, well, maybe we need to reposition. And the market makers, of course, because they have to, those are obligations on their books. The market makers in the options market are not speculators. They're just trying to manage a book, right? So if it looks like they're going to have to pay out on those options, they'll go ahead and buy or sell the stock. And so that's the tail wagging the dog. But then what happens is the price readjusts right here. Anybody, a mom and pop, they got in at 22,000, and they're like, comes down here to 19,000, and they're like, oh my god, I can't take it anymore, and they start selling, right? So this is kind of what happens here. And then there's forced selling. People load up because they think, I've got the perfect plan. It has to go up because I bought it. And so what they do is they portfolio size so that it goes against them a little bit, and they get stopped out because the broker is not going to say, oh yeah, I'll just let you carry that debit forever. Now, when you hit those marks, and the risk management at the firm says, hey, we're going to sell you out unless you put in some more money, and they go, oh, I don't have any more money. Well, we're going to sell you out. That's what happens right here. So you can see on a weekly basis, it looks like it's getting some support here. We don't know. It could fall again, but if it does get support around here, and what I would actually anticipate is that the 50 is going to kind of roll over like this, and then this will come up and it'll tap the 50 a little bit. The 200 is going to come up here and start going to get support. So we're looking at, a couple of months of consolidation before it makes a decision whether it's going to go down or up. So let's go on the daily and see what's going on. So on the daily, okay, look at this. You can see we've gone through this is the third time frame we're looking at, and what's happened is the stock, the product that you're trading, in this case is NASDAQ Futures, which trades 24/5, and that's why you should look at that versus something that only trades 6.5 hours a day. The product price is respecting these bands. So you have back in 2022 when everything starts collapsing, everybody's freaking out again. What did it do? It came down. You had some volatility. This is noise, right? It comes up and it gets resistance from the 50 band, right? Breaks through the 50 band, but gets resistance from the 200. Comes back down, gets resistance from the 50 band perfectly. If it doesn't, most often it's gonna adhere to this band. If it breaks through the band, it's gonna challenge the actual moving average or the upper band. Sometimes, as in this case, it bounces through it, but then you got the next band who's giving you some trouble here. So it's pushing it back down. You have a bottoming process, which took a long time, over a year, and each time it tried to rally, you got the 200 moving average, it taps it, and it pulls back. Taps it, pulls back. Okay, and now it's starting to round out, and this is rolling over. It's going through it. Okay, it rallies and it comes back and it taps right here and gets support, and then it starts going up. That's when you know that it's time to start buying. Okay, so it comes up here in late 2023. Okay, and you're not really sure when the buying's going to be exhausted, but money's not unlimited. At some point it's got to exhaust itself, and people who say bought in here are like, okay, it's time to take some profits, but then there's still some people who want to buy, but everybody kind of runs out of cash, and then it pulls back. So then you got this volatility here, comes down, and it taps the 200 band right there, bounces off of it, comes up, and comes down here. It goes through the moving average, but you can see that's only like one bar, right? That's just one day. Comes down, gets support from this lower band, but it tapped the moving average. Comes up, taps the band. Okay, that's what you're looking for to see what where you are now. What happened here beginning in February? Okay, so you have the dislocation caused by some extraneous, extrinsic event. This isn't the market, just it's cash flow, people buying and selling. This is something that causes people to reconsider what is likely to happen in the future regarding earnings or liquidity, and a lot of it's liquidity. So people start selling because of the uncertainty. It comes down here, it gets support, people start buying, the shorts are covering, and it taps right here, okay, and pulls back. But now you've got the 50 rolling over, and that's going to be its resistance line. So right now, I wouldn't be making any big bets. Long side, I actually wouldn't even be shorting right now. I'd just be kicking back. Okay, it's time to go out to the garage and clean things up. It's time to, binge watch on Netflix. Just chill. Okay, wait for the market to work itself out over the next few months. So let's look at the 4-hour period. Okay, what do we got here? You got, the noise right here going on in 2025. Comes down here, right? This is perfect. And then it gains support, taps the 200 band and pulls back, right? This is where it falls out of bed. Liquidity issue, comes back, taps. Sells off, taps the 50 band, right here, the lower band. Comes up, taps the 200 band. Okay, so now we're getting bouncing back and forth, but this is curling over. If it drops out of bed, okay, we got to look at what's really happening here. But I would say it's very likely we're going to start getting support here. It's going to tap that, and then you got to wait for it to this 50 band to go actually through the 200 band. It could take a month, it could take 2 months, who knows. And if it does that, then we could start seeing a rally. So that's my take on the market. We're going to talk about position sizing at some other date, but I just wanted to introduce you to the how the bands work, and you need to start. If you got a chart with like 500 indicators on it, something's wrong. Okay, you just need a couple simple indicators to show you where the market is, and based upon what it's done in the past, it's gonna do basically the same thing. The patterns just repeat. All right, have a good night. It's Easter Sunday, and we'll see you later.